Hey everyone. Apple has been one of the worst performing large cap tech stocks in the markets worldwide. In this video, I'll preview Apple's upcoming earnings release and answer if investors should buy Apple stock before, after, or not buy Apple stock at all. So I'll take a look at this large cap tech stock and answer these interesting questions that I'm sure many of you are considering right now.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Like I mentioned, Apple is one of the worst performing large cap tech stocks, seeing its stock price fall from over $190 per share to $166 per share as of this recording. Now, Apple is slated to report its quarterly earnings results on Thursday, May 2nd, so investors are asking if they should buy before or after its earnings release. So I'll consider that here. Now, one of the reasons why Apple's stock price is down so much is declining iPhone sales, specifically in China. So, Apple's iPhone sales fell 19% on the year in the world's largest smartphone market, which is China, placing the company third overall behind Vivo and Honor, according to Counterpoint Research on Tuesday. Sales by number four seller Huawei, which has suffered from limited access to advanced chips a year ago, has adjusted to those sanctions and rose 70% on year, helped by the successful launch of its 5G capable Mate 60 series. So, Apple was temporarily boosted in China because of these restrictions on some of these exports to some of the companies like Huawei. But Huawei has found a way around those restrictions and has come up with a product that now rivals that of iPhone and is experiencing a surge in sales, and that's coming at the expense of Apple. And so, Apple, as I will share with you a little bit later in the video, the iPhone is a critical part of Apple's business, and any headwinds to the iPhone impact the business overall meaningfully. In fact, Apple's iPhone dependence is one of the bigger risks in investing in Apple stocks. So much of the company's results depends on the iPhone. And so when there's headwinds to this product, it will impact the whole company significantly. So the stock price is down, understandably so. Now, in the upcoming quarter, a few things I'm going to be looking at. And in its latest quarter, which ended December 30th, Apple demonstrated some key improvements in the business, even though sales were not impressive. You can see the product category. Sales were relatively flat to 96.45 billion, up by 100 million from 96.388 million, well, less than 100 million. But Apple managed to lower the cost of production, decreasing the cost of sales for products from 60.765 billion down to 58.44 billion. So a more than 2 billion improvement, or more than 2% improvement on the cost of goods sold, improving its gross profit margin in the product segment. Now, a lot of investors have been, I want to say, less than impressed with Apple's incremental improvement in the iPhone. But you have to understand the fact that it's only been incrementally improving the iPhone using many of the same parts and only adjusting the production slightly allows Apple to produce these products more profitably because it's gaining experience in producing this form factor. And so it's incrementally improving it and at the same time decreasing the cost to produce and improving its profit margin there. Now, one thing you'll also note from Apple is that the services segment is incredibly more profitable than the product segment. In the latest quarter, you can see services cost of sales of 6.28 billion on revenue of 23.117 billion. And so that's the area where investors are looking for continued growth. And you saw that in the latest quarter, 23.1 billion, up from 20.7 billion in the same quarter the prior year. So Apple is demonstrating much faster growth in the services segment versus its product segment. That being said, the services segment relies on the product segment. If you don't buy an iPhone, you're less likely to subscribe to Apple Music, to Apple TV Plus, to Apple Care, to other apps that you buy from the App Store. And so it's strongly dependent on sales of products. And so at the very least, investors want to see Apple sustain some level of growth in the product segment because that's a harbinger for growth in the services segment. So that's something that I'll be paying close attention to when Apple reports earnings. And so even though product segment growth was flat, that improvement in profitability, the operating profit margin jumped from 36 billion up to 40.373 billion in the latest quarter year over year. So a more than 10% increase in operating profit margin on a less than 2% increase in total net sales. The business, the execution, they're getting really good. Apple's getting better and better at operating its business, even though, admittedly, it hasn't demonstrated significant innovation in many years. Now, you'll argue with me on that statement and say, what about the Apple Vision Pro? That's an innovative product. Yes, but it's not yet widespread at a price tag over $3,000. It's not yet a meaningful part of Apple's business, and it remains to be seen if it'll obtain mass customer adoption. They need to lower that cost of production so that they can offer that product at a lower price point so they can get it into the hands of more customers and make it a more widespread product if they want that to be a incremental increase in its business. So the two big things investors will look at in the updated quarter when Apple reports is the Greater China segment. We highlighted already that Apple's iPhone sales in the country are declining. It's losing market share. And even in the previous quarter, revenue in the Greater China region fell to 20.8 billion, down from 23.9 billion. So a big drop off in revenue from the Greater China region. And it's likely that those headwinds continued as evidenced by those declining iPhone sales numbers that just came out today. So I'll be looking at this, and it's already becoming a smaller and smaller part of Apple's revenue. Still, Apple has significant supply chain exposure to the Greater China region, and the geopolitical tensions are not helping Apple, and investors are concerned about Apple's risks from that region. So Apple has been diversifying its supply chain away from China. Still, it has a very long way to go to decrease those risks from that region. So I'll want to hear more about how Apple is thinking about that, how they're diversifying those risks without having to kind of duplicate their production. How are they managing that? It's not an easy thing to do. So far, they've done it well on the supply chain side, and they've handled the revenue decrease as well. But it's still, you see this $3.1 billion decrease from the region. That's still likely to continue in the upcoming quarter. iPhone sales jumped from 65.775 billion to 69.7 billion in the most recent quarter. That was good news, and I want to see continued increases. If the company can continue to demonstrate this kind of increase in iPhone sales worldwide, despite the fact that it's losing market share in the Greater China region, that's great news for Apple stock investors. I want to see that continue. That's something I'll be watching closely. And finally, cash flow from operating activities is a key metric. Apple demonstrated excellent execution here, increasing cash flow from operations to 39.9 billion, up from 34 billion in the same quarter the prior year. So despite relatively flat sales numbers, the execution of the business, the management quality, and the foundational building of the business has allowed it to demonstrate quality improvements even with flat sales. So imagine what the company can do if it can start turning things around with sales growth and coming up with something I haven't yet talked about in this video, which is an innovative artificial intelligence infusion into its products. It desperately needs to infuse some of its products with AI. Siri is not very intuitive and it feels lacking considering all the developments that have come out with OpenAI and large language models. That's the final thing I'll be paying close attention to. Any insights into what Apple is doing with AI? So, to answer the question, should investors buy Apple stock before earnings? And I have Apple stock rated as a buy. It's trading at a forward price to earnings of 23.34. So I think investors can buy before earnings or they can buy after earnings. It's just a matter of which risk do you want to take more? Do you want to take the risk of missing out on a surge in stock price following the earnings? Or do you want to take the risk of buying ahead of earnings and then the earnings being disappointing and the stock price falling by 10, 15, or 20%? So which risks are you more willing to take? For me personally, I prefer to take the risk of missing out. I'd rather miss out on gains than have that stock price decline. Around earnings, stock prices are more volatile. So I generally prefer to buy after a company announces earnings rather than before. Or if I really want to get into it and I really fear that the earnings are going to be really strong and I'm going to miss out, I'll split my investment in two, buy half before earnings and half after earnings. If you liked the video you just saw and you want to see more just like it, please subscribe to the channel. I can't keep this channel free without the support of viewers like you. And if you're already subscribed, thank you, and I appreciate your support.